All right, welcome back, everyone. Today, we're going to be taking a deep dive into this podcast episode, Time versus Price, When to Enter and Exit Trades. It's from the Trading Mindset Mastery Show. And, it really got me thinking. We always hear, like, buy low, sell high, right? But this episode kind of flipped the script and got me thinking about, well, the when factor. Like, how important is timing really in trading?
Yeah, it's definitely a crucial factor that often gets overlooked. It's easy to get caught up in the price action, but time really provides the context. You think of price as like a snapshot, right? And time is the whole movie. You need both to really understand what's going on.
Okay, yeah, I like that. So it's not just about finding, a good price, but also understanding the context of when that price is happening.
Exactly. Like let's say two traders see a stock breaking above resistance level, right? One trader, they get all excited, jump right in, thinking, "Oh, this is it, breakout time."
Right.
But the other trader, they wait, they watch the volume, check the momentum. What if that breakout happened, say, in the last hour of trading on a Friday, right before a long weekend?
Yeah. I see what you mean. That first trader, they might be like jumping in right before things quiet down, and all that initial excitement could just fizzle out.
Precisely. And that's what the Trading Mindset Mastery episode really drove home, that the timing, especially around, market events, make a huge difference. Like a breakout at the open when everyone's piling in, that carries a lot more weight than one during, say, a quiet afternoon when things are slow.
Makes sense. So, how do we actually put this time thing into practice? The podcast talked about two main entry strategies, price based and time based. Have you used either of these?
Oh, yeah, definitely. So price-based entries, those are all about using technical analysis. Things like support and resistance levels, trend lines, candlestick patterns, those kind of things.
Yeah, so if you see like a stock bouncing off that floor, the support level, that could be a signal to buy. That would be price based, right?
Exactly.
Yeah.
But then you have the time-based approach, which is more about understanding the rhythm of the market. You know what I mean?
hmm
Like, for example, did you know that a big chunk of the day's gains often happens in the first hour of trading?
No, I didn't know that. But that makes sense. Like everyone's kind of fresh, reacting to the overnight news, and there's just a lot more activity, right?
Yeah, exactly. And that's why, a lot of traders will focus specifically on that opening hour. But, the real magic can happen when you combine the two approaches. Like imagine, spotting a stock near a strong support level. And then you wait for that opening bell, high volume, everyone's in. You're really stacking the odds in your favor at that point.
Okay, so timing isn't just about like when the markets open or close, but also choosing your entry point strategically within those time frames. Now, what about exiting trades? Does timing matter as much on the way out?
Oh, absolutely. A well-timed exit. It can be the difference between like locking in a solid profit and watching it just vanish.
hmm
Again, we have price-based and time-based approaches here.
hmm
So with a price-based exit, you might set a profit target, right? Based on a resistance level, for example. As soon as the price hits that ceiling, boom, you sell, you take your profit.
Yeah, it's a clear way to take profits, no emotions involved. But what about when, the price just isn't moving the way you hoped? I guess that's where the time-based exits come in.
Exactly. You could set a time limit, say 1 week, and if a trade hasn't moved in your favor within that week, you just exit, no matter what the price is. This helps you, avoid getting stuck in a losing position for too long.
Yeah, it's like saying, all right, I gave this trade enough time to work, time to move on. I can see how that would be helpful for managing risk and staying disciplined.
It's all about, protecting your capital and avoiding those emotional decisions. And that's where practice becomes really, really important. And speaking of practice, the Trading Mindset Mastery episode had an interesting suggestion for that.
Trading simulators. I've heard of them, but never really used one.
Yeah, they're essentially a way to test your strategies risk-free,
Yeah.
including your timing. So you're trading with like virtual money, seeing how your decisions play out in like a simulated market environment. The podcast specifically recommended simulator.com, I think it was,
Yeah.
because it's got really realistic market conditions. So, you could feel for how things work.
So it's like a flight simulator, but for trading. You can experiment, try different approaches, and see what works without risking any actual money.
Yeah, exactly. Think of it as, a learning tool, not a get-rich-quick thing. The important thing is to approach those simulated trades with the same discipline and mindset you would use with real money. Analyze your decisions, look for patterns, see if you can consistently make those profitable trades with good timing.
This is making a lot of sense. It's not just about buying low and selling high, it's about buying and selling at the right time. And the best part is, we can practice this in a safe environment before we risk real money. That's great.
That's the beauty of it. And remember, every trade, whether it's a win or a loss in the simulator, it's a learning opportunity. So just, embrace the process, stay curious, keep experimenting.
Welcome back, everyone. Thinking about this whole timing thing in trading, it's really got me looking at things differently. The Trading Mindset Mastery episode, they spent a good chunk of time talking about the mental game, the psychology of exiting trades, which I thought was super interesting.
Oh, absolutely. It's one thing to have a strategy, right? But sticking to it when you're in the thick of it, when things are moving fast, that's a whole other challenge. It's like you've got this plan to eat healthy,
Yeah.
all prepped and everything. But then, bam, they bring out the dessert menu.
Oh, yeah. I get that. Big time. I can definitely see how emotions could throw a wrench in the whole trading plan, especially when there's real money on the line.
For sure. The episode, they talked about how fear and indecision, they can really mess with your judgment.
Yeah.
You might end up holding on to those losing trades way too long, hoping they'll turn around. Yeah. Or you get spooked and you bail out of a winning trade way too early.
It sounds like we need to be as disciplined with our emotions as we are with our, actual trading strategies.
Exactly. That's where those clear exit rules we talked about earlier, those
Good.
become super important. Having like predefined price targets and time limits, it helps take some of the emotion out of it. It's like having a safety net and a little celebration planned, all in one.
I like that. It creates a framework for making those decisions based on logic, not, fear or greed. But let's be real, even with the best rules, trading can throw some curveballs, right? Like, how do we handle those unexpected market swings or those news headlines that seem to come out of nowhere?
That's where adaptability comes in. No strategy is perfect, and the market, it's always changing. What's important is being ready to, adjust your approach as needed. Trading Mindset Mastery, they didn't really give specific tactics for dealing with the unexpected, but they did say how important it is to stay informed, keep an eye on the news, be ready to react fast.
So it's kind of like having a backup plan for when the original plan goes out the window.
You could say that. It's about being, flexible, understanding risk management. One thing they did mention, I thought it was a good point, was position sizing.
Position sizing, yeah, I've heard that term. But could you break that down for me?
Sure. So position sizing, it's basically figuring out how much you're going to risk on any single trade. Instead of, going all in, you're putting in a specific amount based on like your confidence level, how the market's doing overall.
Got it. So if I'm feeling kind of iffy about a trade or if things are really volatile in the market, I might reduce my position size, right? To try and minimize potential losses.
Exactly. It's a way to protect yourself. Make sure one bad trade doesn't wipe out your whole account. The podcast didn't get into specific strategies for position sizing, but it's definitely something worth digging into more.
Adding it to the research list. Feels like the more I learn about trading, the more I realize there is to learn.
That's the thing with trading,
Yeah.
It's always evolving. There's always something new to learn. Trading Mindset Mastery, they really emphasize that. They kept encouraging listeners to see everything as a learning experience. Every trade, every time the market jumps or dips.
I like that. Takes the pressure off, Instead of having to be right all the time, it's about just getting better little by little. Now, we talked about practicing with those trading simulators in the first part. Do you have any tips for getting the most out of those?
Definitely. Simulators are great tools. First thing, pick a simulator that fits your style
Right.
and the markets you're interested in. Some are, more for stocks. Others focus on Forex or crypto.
So, gotta find one that matches your goals in the real world.
Exactly. Next step, treat those simulated trades as if it was real money. It helps you build discipline so you don't make those, crazy decisions that you wouldn't make with your own money.
No YOLO trades just because it's virtual cash.
Yeah.
Makes sense.
Right. And last thing, make sure you're tracking your performance. Most simulators have like these detailed reports and analytics. Those can help you spot your strengths, see where you need to improve.
It's like having a built-in trading coach in the platform. Pretty cool.
Exactly. Analyze those simulated trades, learn from the mistakes, and use those insights to, sharpen your strategies. It's a great tool, even for those who've been trading for a while. You can test out new ideas before you put real money down.
Wow, we've covered a lot in this deep dive already. We started with time versus price, right? Then we got into the psychology of all this, the importance of practice, and now this whole idea of like macro level timing and fundamental analysis. Feels like we've explored a whole trading universe here.
Glad to hear it. And remember, this is just the start of your trading journey. There's always more to learn. The key is to keep that trading mindset mastery approach. Be disciplined, stay informed, practice hard, and never stop learning.
Great advice. It's not about being right all the time. It's about always improving. Like they say in the podcast, every trade is a chance to learn. All right, everyone, that wraps up our deep dive into trading mindset mastery. Hope you all found it helpful. And remember, the learning never stops. Until next time, happy trading.
Welcome back to the show, everyone. We've been really focused on the timing of individual trades, but there's another layer to this whole time versus price idea that the podcast talked about.
Yeah.
And that's understanding those bigger market cycles, the trends. It's like timing isn't just about reacting to what's happening right now, but also like anticipating what might happen next.
Yeah, that's a great point. It's like you wouldn't plan, a cross-country road trip without checking the weather patterns for different regions. You wouldn't just look at like the immediate forecast, right? Right. Makes sense. So we need to be thinking about those weather patterns, so to speak, the market cycles and trends to make better timing decisions.
Exactly. Focusing on individual trades is important, of course, but stepping back, looking at the bigger picture, it can give you a real edge. It's like, are you sailing with the wind or against it,
I like that. So how do we actually do that? How do we incorporate this macro level timing into our trading? The podcast didn't really get into specific strategies, but they mentioned things like economic cycles, geopolitical events, even like seasonal patterns in the markets.
Right. And that's where fundamental analysis comes in. So remember how we talked about technical analysis, using charts and patterns and all that to find those price-based entry and exit points?
Yeah.
Well, fundamental analysis is like the other side of that coin for the time-based decisions.
Okay, so technical analysis is about the price and fundamental analysis is more about the timing.
You got it.
Yeah.
It involves looking at a whole bunch of information, like economic indicators, company earnings, industry trends, even like global news. It helps you understand what's driving the market, the bigger forces at play.
So we're like adding another dimension to our strategy here. We're not just looking at the technicals, but also the bigger picture, right?
Exactly. And that long-term perspective, it can actually inform your shorter-term timing decisions. Let's say, you've done your fundamental analysis and you think a certain sector is going to take off. You might be more willing to enter trades in that sector, even if there's some short-term volatility, because you're basically betting on the overall trend.
Yeah, so even if there are some bumps along the way, we're confident in the overall direction because of our fundamental analysis.
Precisely.
Okay.
But just like any good sailor, you got to stay alert. Be ready to adapt when conditions change. The market is dynamic, so you got to keep learning.
This has been, wow, a really eye-opening deep dive. We went from like the basics of time versus price to the psychology of it all, the importance of practice, and now this whole world of macro-level timing and fundamental analysis. We've covered a lot.
I'm glad you think so. And remember, this is really just the beginning of the journey. There's always more to discover. Just got to keep that trading mindset mastery approach. Stay disciplined, stay informed, keep practicing, keep learning.
Couldn't have said it better myself. It's not about being perfect. It's about constantly getting better. Like they said in the podcast, every trade is a chance to learn something new. Well, on that note, that brings us to the end of our deep dive into trading mindset mastery. I hope you found it as insightful as I did. Remember, the journey never really ends, so until next time, happy trading, everyone.